Good afternoon, good evening, and good night. October the 1st, 2025. So let's have a little look at overnight and possibly why we set up this overnight, and then we'll go into the movements and the data for today. So yesterday, one of the things, I think I posted this on X, but one of the things data told us yesterday that we were going to sweep the low and sweep the high. So whichever one you swept first, more than likely you were going to go sweep the other side. All right, so we did. We went and swept, missed the high of day there. Then we tried to come down. And at this point, when we came down, probability was telling us that we were going to come try to get into this low of day zone, which we did not. We held. Where did we hold? The weekly open. The weekly open is just the open price for the week on Sunday. So another one we pay attention to is the monthly open right here. But that happened today. But we'll get into that, and we'll see how that might have affected today. So what did we get overnight? We got this move down. Talk of government shutdown, whatever. But where did it get us? Right into the smack dab middle of this low of day zone. So there was a pattern that completed right here. We had another pattern that was trying to complete down here. And we know that we had that pattern that was trying to complete down there. So now what we're going to do, knowing that that's there, we're going to flip over. We're going to go look at our data. So data is telling us that the low of day for today should have been put in at 3 o'clock with a small possibility. Actually, it's less possible than the 3 a.m. low, but there's still a possibility we attempt to go sweep the low side. But because we got this move here, chances were probably a bit less. But if we were to go sweep, where would we try to get to? Well, this right here. All right, so now, if we were to go measure out these low of day zones, this first low of day zone here, 0.4 to 0.5, all the way out to a 0.7 to a 0.8, with a little reach. No, 0.7 to 0.8 was a low of day. So let's measure this out. 0.85. So we even swept the low of day. But if we look at the 0.8 here, you get all this hold inside of it. Right, so statistically, that's the low of day area. We just swept it slightly. All right, so for me, now if we flip back over, here's our high of day ranges, and we'll get those marked out. They're already marked out, actually. And the most likely high of day is going to be the end of the day, with a possible squeeze out at the open. So the idea being that we try to push into that 9:30 candle and then continue to push and fight with a potential pullback middle of day to go take out the high at the end of the day. All right, so statistically, if we were to go get, there was one stat here, 92% chance to go hit the Asia mid, which is this up here. All right, that's this right here, this purple line. I'll zoom in so we can see this better now that we've gotten the other stuff talked about. So right here. We also had for the 12-hour high, mid, and low, high is 88%, 87% mid, which we've already gotten, and then 60% to go take out the low side. So 60% chance to come down here. Not horrible, but not good. And then you had a 88% chance to go take out this high, and a 90% chance to take this out. Now, what we have sitting in the way is this monthly open. So you can absolutely expect, if I'm long, any sign of rejection here, I'm going to get out, look for a pullback before I try to take it higher. And they tend to serve as just rejection points for some reason. I mean, it's the open price for the month, and it just happened to be on a Sunday. Right, the monthly open just happened to be overnight. So I think we've got our stats. Let's see. We can also look at some price model clouds. So these price model clouds are just based on historical data, the most, kind of predicting the shape. So what we want to see is something like this median of low right here. We want to see this, 8:15 to like 8:30 range. We want to see it get swept before we take an entry. All right. So if we flip back over, what does that look like? That's right about here. Right. We got that nice little sweep around 8:15. So that's what we'll look for. So our entry is any sweep at all, any sweep down here. We're going to take it. Where are we going to get out? Well, we got to know that this is a possibility. So we can either get shaken out or we can try to build a long position. The problem being that's 200 handles away. That's a long way to sit in a trade. And for me, if you remember, I follow standard deviation. So if we get below, if we sweep this 4 and get into this 6 and we can't hold this 930 zone, I'm probably not interested anymore. I'll take my hit and then see if anything sets up later in the day. If it does, great. If it doesn't, then it'll be a red day for me. So that's the plan. Now, let's see how this starts to play out. Got our sweep, got our entry. Now, we didn't quite get to this monthly open, so we're trying to build the push. All right, what we need to see is a continuation up and through to try to get to this high. And if we can't, we're going to start seeing rejection. We're going to get out and we're going to wait. Now we're going to look at the next candle. Not a great sign. So here we're looking to exit. So within this 5-minute candle, if we start to see this thing's going to pull back and try to take out this wick, we're out until we get a better setup. Right? And it was a pretty quick move to the downside. Now, if you're in the room that I'm in, this is one of the things I mentioned is that if this thing's going to come down, it is going to do it quickly. And it was because if we were going to pull back on the footprint, there was a lot of buying imbalance in the way. So to come down through that without holding, you really have to move through it and you have to shake everybody out and get them to exit out of fear. All right. So now the expectation is if we're going to go long now that we swept 930, what I'm looking for is a hold of 930. I need to get back above it and we need to hold it. So if we get a wick into 930, that's my entry to go long. There's the move up. There's the hold. So there's our entry. Anywhere in this candle is the entry. And it's the same, right? If we start getting too far down here in this 6 deviation zone, not interested. So we can start now looking for what our targets are going to be. We know that this is a possibility. We know that these two are highly likely. All right, so now what have we set up? Well, fortunately or unfortunately, however you look at it, we've got a possible Gartley rejection. Right, we've got this 618. Right, we've got this pattern here, which tells us that rejection can come between the Gartley, or we could try to go squeeze this out. And if we go squeeze it out, where are we going to squeeze it out to? We're going to go squeeze it out to this 886 here. So we can do a measurement here and kind of see. Yeah, so, I mean, this is a wonky setup, but because the 100% is above the 786, I'm looking for the 886 or the 100%. Now, for me, it's going to be the first target's going to be the 886 with an expected pullback. All right, so I guess we should have left that, but All right, let's remeasure this now. All right, so we're going to look at this 24881. And we got it. So there's your first target. What are we looking to hold on pullbacks? We're looking to hold these 930 zones. We want to get above this 12-hour candle. And we want to see this second 12-hour candle continue to build up on top of this initial 12-hour candle. Now, of course, it opened in the middle of it. But we want to see it continue to build on top of it. And where's our next target? Well, we have this shark here. Now, measurement makes it a little bit wonky of a shark, and you'll hear me say wonky a lot. But the other two targets I want to see, the 886 and then the 113. If I see any rejection in this high of day zone that we have, and when I say by rejection is get it, because now you have to understand, if I've got this 886, I'm down to my last part of my position. So I'm willing to sit through a bit more pullback. But if I see rejection where we get knocked out of this high of day zone and we start coming down, I'm just going to exit. I don't want to sit through that much of a pullback. So what I want to see is get in toward that high of day zone, get rejection, because that tells you that the market's respecting our high of day zone, and then a continuation to go chase that 113. All right, so we'll continue to play this out. We're building on top of that 12-hour, which is nice. We're reaching for that 113. And there we go. Now we can expect some pullback if we're going to get it. Reached our high of day zone. Didn't even get pullback, really. So now, where's our ultimate target? Our ultimate target is going to be up here, 25,020. Done. So 3 harmonics or so, I think. 3 harmonic patterns. One, we had this shark, and we had several others, right? There's, as I've said before, and as I'm sure, Carney says all the time. There's harmonics on every time frame. There's a deep crab looking dealio here that just, the 1902 and the 2 got respected, right? It was around the 886. And so these are the things I love to see. I love to see other patterns that take me into the bigger pattern. Now, you expect more pullback than what we got, but, such is life. I'm not going to cry about the fact we didn't have to sit through a bunch of pullback. But this goes into, I don't like to sit in trades all day, and I've said this before. But it doesn't mean I don't and I won't. All right, so this was really the setup today. We were willing to take our loss, as we said, when we got into that deviation zone. But again, look at what happened. If we get and look at these deviation zones, you can't really see them, but this is the 2 right here. This is the 4. And this up here is our 6. When we reach that 6, that's my point of no shorting. So for me, I'm only looking, if I'm not in a trade, not going to short. If I'm in a trade and I have a target we're trying to reach, I'll write it out. Because that tells me we reached that deviation spot, and there's no interest typically in the market rejecting hardcore coming back down. I'm not saying it never happens. All right, so those are the 3 things, and I'll talk about this. My main 3 things are looking for harmonic patterns. Where does the data support this market going, and how does it pair up with those harmonic patterns? And I watch where we touch these standard deviation zones and how we react. That's it. Now, sorry, that's not it. That's my main three. I do use footprint. I do look for imbalances in footprint. I do use tools that tell me where the money is sitting out there. I have RSI indicators. I have an indicator that goes along with this to tell me the strength in the oscillator. Right? It just tells me basically what the strength is moving into it. Right? Are we running out of steam or not? But ultimately, the three things that I use, I describe in these videos. Now, there are other tools that we can use because, like I said, I do use the hourly box, right? Because I want to see them used as support and resistance. It's a thing I like to see. Middle of the hour, things like that. And we have some other tools that go along with the database that help auto map some of these things, ranges and things like that, to know, are we extended on range? Are we even on range? Are we short on range? And this is just historical range to give us an idea. If the Asia session has extended its standard range and the London session is extending its standard range, what do you think the New York session is probably going to do? It's going to extend its range. Again, doesn't mean it's going to happen every time. So that's going to be it. I could continue to talk through some other things, but for me, that was the setup. Again, if you don't understand harmonics, you should. Right? These impulse moves that occur, it demystifies them. It helps you understand, based upon this first measurement, where the rest of it's going to go. And again, I like trading the C to D leg. I'm not a huge fan of reversals. It's not that I don't look for reversal trades necessarily. And I know when I say that, I like to dollar cost average if it's going to move against me. And I guess in that sense, it is trading a reversal, right? Because I know that we could come down to some of these other areas that would set up possibly a reversal. I'm aware of that too. So if you don't understand harmonics, if you have a strategy that works for you, fantastic. Trade your strategy. Right? The database and the data in that database that I use, it doesn't only work with harmonics. If you have other targets that you are looking for and you have reason to believe the market's going to go up, well, if you have targets sitting up here and these highs of days and lows of days line up with it, then they pair. They pair together. So anyway, hope everybody's doing well. This has been a bit more long-winded than I thought it was going to be, but I will try to do another one of these tomorrow. I don't know if I'll do one on Friday because nobody tends to look at them on Friday. So hope everybody has a good afternoon and evening. I'll see everybody tomorrow.